allocations, majority bullish at 13-1, seeing a pretty decent move down yesterday, 1.5% on S&P 500, starting to get back into this support range, this 5,800 area. We moved up to that 6,000. Now we're towards the bottom end of this white zone right here, this playground zone, the top end of this demand location. And if we move this over just a little bit more, it's going to grab this low and this high. You can see we've got another range. So really inside of this 58.40 range all the way down to 57.19 range could be bullish demand. So keep an eye on that. We are softening just a little bit, but that's to be expected after such a strong move. Now we're going to watch to see where we get any kind of support coming in. S&P closed out yesterday at 13-1 as well. We saw a pretty decent move back down in breadth, also back to 65. We were up in that 80 range. We touched that 80 range. We're very close to it, and that is a range we talked about yesterday where we can stay for a few weeks. We can certainly get to that area. Once we get up into this range, it's just not sustainable without some kind of a pullback. So we're working on that pullback. As of right now, VIX also pushing up a little bit this morning, up to 21. So moving back up above that 20 number. So we're seeing a little bit more fear coming back into the market on that move yesterday. Short end of the yield curve, we're seeing SHY still majority bullish at 9-5 on the weekly, majority bearish at 10-4 on the daily. So seeing weakness in bonds. That's not the direction we want to see bonds moving. We want to see bonds moving higher. I should say the market does, the economy does, companies do, households do. We don't want to pay higher interest rates, is what lower bond prices mean. That's translated into a 2-year note of right now right at 4% and working its way to the upside, majority bullish here on that price pattern. Also TLT, the long end of that yield curve, really sliding, and we've got some support that could be coming up here on TLT, and if that continues to move lower, we could see a real spike here in the 10-year treasury. This is becoming a concern here at 461 now on the 10-year. We'll see if markets are starting to get a little bit of a worried tone here based on interest rates as well, or if they are fine with where they are at currently. That could lead the session today, as well as a retracement as of yesterday. Dow Jones Industrial Average back into the demand zone here, right at that 618. The top end of that 618, that's a counter trend move of this swing high, swing low. And so if we move this to more of a bullish perspective here like this, we're seeing that area. So 413, the bottom end of that demand zone there as well for Dow. And the triple Qs also up into the supply block, still at 14-0, and could get a bit of a retracement here as well, like all markets, and watching to see this range, the upper end of this range, 500 on triple Qs. If we continue to slide, that could be an area of support. And again, these are, we kind of want to see this. We don't want to see things go straight up and then straight back down. We want to have them come up and then pull back for a few days, watch for some support, continue the overall uptrend. We're definitely in a more bullish scenario as far as trend. The real risk here is that we're very extended still in this overall uptrend. We've talked about this price pattern right here being similar to this price pattern over here on really across the board. Let's take a look at Russell 2000 here as well, sliding pretty aggressively yesterday, majority bearish at 9-5. This is an example of that potential for counter trend moving back against the trend. Let me get this drawn in here like this. So we're working on this downtrend now as this counter trend and getting compression back this direction for continuation to the downside. On Russell, that still looks like a scenario here, more bearish undertone for Russell 2000. USO, let's take a look at oil, seeing it pull back a little bit this morning, 66.90, as it's volatile inside of that range. 69.80, 66.31 is that playground zone for oil, and not, we'll be watching if it does retrace for some support at that 66.31 area. Gold is had a nice little pop yesterday, back up to 304, or still at 304 this morning, holding above that momentum zone. Anything above 300 for gold, just be aware that this gold trend on the weekly time frame is very unsustainable, but we could get we could chop around inside of this momentum zone above that 278 range on the weekly time frame. Still working on the momentum trade here for gold on the daily time frame. Also, silver had a decent move the last couple of days. That may be an area to be paying attention to, potentially more so than gold, as it's got a little bit more compressed pattern. Could get more of a kind of a spring-loaded effect if it does get a breakout. Dollar also showing a little bit of a really no move, really no change at all there today, as we're seeing gold and dollar. That's also a concern with tariffs and things that are happening. Is the dollar going to continue to weaken, or are we going to get some strength here eventually? A couple stock ideas to consider today. Not a whole lot in the list from yesterday, but we did see CME make sense here with all the volatility there. Going to benefit from lots of trades and transactions back into momentum here, increased volume, and a couple of motor vehicle stocks in the list. Nice volume, not in momentum, but big confirmation bar here back above 382. That's on NIU, and then also XPEV in a similar type space. Chinese motor vehicle EV space. These guys are in the scooter space as well, electric scooters. So a couple of interesting stocks there in not a whole lot to look at though as of today, with a little bit of a market pullback. That'll do it for today's update. Everyone have a fantastic day today.